fundsupermart.com.
What is your outlook for Malaysia's economy?
For 2015, we are looking for a GDP growth of about 4.8%. That's lower than the 6% that we recorded in 2014. The slower growth is because we expect consumption to moderate on the back of the implementation of GST.
How much further upside is there for investors, and are valuations still appealing? What about the earnings outlook?
Okay. It depends on which market segment that you're looking at. Yeah? If you are looking at the large caps and you use FBM KLCI as your benchmark, then we would say that the upside there appears quite limited because the valuation is already one standard deviation above the mean. Yeah? But if you look at the mid caps to the small caps, you use either FBM 70 or FBM small cap as the benchmark. The valuations are actually quite close to the mean, yeah, which would suggest it's not as expensive as the larger caps. And even if you look at the earnings growth, consensus expects the earnings growth to be stronger in the small to mid cap space. Yeah, so we at UOB Asset Management, we are a bottom-up house. Yeah, so we drill down into individual companies and we look for the best investment opportunities in the various companies. Irrespective of whether economic growth is 0, 2 or 5%, we will continue to look for investment opportunities.
Now that GST is implemented, is there any negative impact thus far that could pose downside risk to the economic growth?
Okay, we are expecting consumption growth to moderate, as I mentioned earlier. Consumption growth, we are probably looking at about 5% this year, yeah, compared to slightly over 7% in last year. Yeah, but the impact may not be as significant as some may think. Okay, for two reasons. One is the impact from GST we think will be quite short term. If you look at the experiences in other countries, yes, post-GST consumption will slow down a bit, but the experience in other countries show that consumption can get back to normalcy within 1 to 2 quarters. Yeah, so we think that we can adjust to that. And secondly, some of the adjustment for GST has already taken place much earlier. In fact, as early as third quarter of 2014, we already saw consumers getting a bit more cautious already. Yeah, so what we are saying is that the adjustments have already taken place as early as 2014. So the impact in 2015 may not be as significant.
The depreciation of the ringgit has weighed on market sentiment. If it continues to weaken, what do you expect to happen? Is it all doom and gloom?
Okay. We need to put things into context. Firstly, it's a function of US dollar strengthening. Yeah, US dollar is strengthening against almost all major currencies. Yeah. Secondly, yes, the ringgit has depreciated a bit more because of the linkage with oil. As you may be aware, Malaysia is a net oil and gas exporter. So weaker oil prices affects our country's finances, and it gets reflected in a weaker currency. Yeah. But if you compare Malaysia to other countries which have a commodity flavor, like Australia or even Norway, you will be quite surprised to know that since end October last year, which is when oil prices really started to fall, the ringgit has actually strengthened 2 to 5% versus the Australian dollar and the Norwegian kroner, right? I don't think we will say that Norway or Australia is doom and gloom, right? Yeah. So we've got to put things into context. Yeah.
Based on your views and outlook, how are you positioning your portfolio? What are some of the sectors that you have the most and also the least conviction in?
We are a bit more cautious on the domestic market in the short term because of volatility in oil price. Yeah, we think that the Malaysian market direction will have quite a bit of influence from oil prices. Yeah, so if oil price remains volatile in the short term, the Malaysian market will probably have some volatility as well. And because of that, we are keeping some cash in our portfolio to take advantage of any market volatility that may happen. Yeah. But from second half of 2015 onwards, we think that market conditions will improve on the back of a more sustained recovery in oil prices. We think that in second half of this year, the oil supply will start to respond, and that will help to underpin a more sustained recovery in oil, and that we think will translate to a more sustained recovery in the Malaysian market as well. So a bit cautious in the short term, but more positive 6 to 12 months out. Yeah. So in terms of sectors that we like and don't like, we look to the exporters quite favorably because they will benefit from a stronger US dollar. We like construction. We think that the contract news flow in the coming months will continue to be quite strong. We also like companies which have demonstrated pricing power. We are in an environment where there's a lot of pressure in terms of higher cost. Yeah, so we need companies that are able to pass on all these costs to the consumer, right? For them to protect their margins. Plantations is not something that we look favorably on. We think that CPO price may not do as well this year. Yeah, in fact, it's already down year on year. Yeah, so we think that there's not a lot of reasons to be bullish on CPO price over the next 12 months. We think financials could be a bit challenged as well, yeah, because margins are under pressure, and in terms of credit costs, we could see that inching up over the next 12 to 24 months.